Hello, everyone. I hope that you've had a wonderful weekend, and today we will do our weekly analysis. So, this week is actually one of my favorite weeks. All right, it's week 2, CPI week. The week 2 is usually when we have CPI, by the way. Like, if you don't know that, I don't know if I've said that before, but usually in the second week of the month, well, not usually, it's always the second week of the month. That's when we have CPI, right? Why? Manipulation, right? So that's the purpose of CPI. And as you guys can see, right, today, Sunday, March 10th. Tomorrow is Monday, right? We have no news. So tomorrow, what can we expect? We can expect one of two things tomorrow, but either one of those will have one thing in common, right? Price will be lackluster, or it will just expand, right, without any retracements, right? So it will basically just be low probability. Why do I always do that? It will be low probability, right? More than likely. So tomorrow we don't have any news, and then due to the fact that Tuesday we have all of this, liquidity being injected into the marketplace, right? We can expect, Monday to not do much, right? So we have core CPI at 8:30 a.m. in the morning, right? So we know that the setup, one of the best setups for the week, going to be Tuesday at New York session. In the afternoon session on Tuesday, we have a high impact news event again. This is an important, right? Don't matter what this is. You just want to see a red folder. So Tuesday will more than likely set the tone of the week, right? Tuesday. So tomorrow we're just going to study what Monday does, right? There could be a setup, of course, but I don't think that, if you're new, you should be taking it. Or if you want to take, a setup or try to trade Monday's range or whatever, use a demo account, right? So on Wednesday, we have news again in the afternoon session, right? So this is Wednesday and we have news in the afternoon session, which could be reversal for the day of Wednesday due to the fact that we have this news event in the afternoon session, right? Thursday will be very impactful to the week as well, like Tuesday, right? So we could have Tuesday and Thursday, respectfully forming one doing the high of the week or the low of the week. But either way, one of them will, do the high or low of the week. Pretty sure about that. So Thursday we have a lot of red folder news at 8:30 in the morning, which is the New York session, right? So if we see sequential SMT between Thursday and Wednesday, right, due to the fact that we have all this liquidity being injected into the market, we can expect reversal. And the same thing goes for Friday and Thursday, because we have a lot of volatility being injected into the market on Friday as well. So this week should be fruitful, right? That's what I think. Right, like 80% sure. So to go over again, Monday, we just watch the market, right? Now, some of you are advanced, I can't stop you from trading if you want to, right? But just, be mindful to risk. Tuesday, New York session will be very important. We'll set the tone of the week. Wednesday, afternoon session setup. Thursday, New York session setup. Friday, New York session setup. So I just told you based on this alone, right? When we can expect the setups to form. And this is, this is across, goes for every market, not just forex or index futures or bonds, right? So now we'll look at the dollar index, right? We'll look at the weekly time frame. As you guys can see, we are at a disadvantage, currently when it comes to reading price action, but it's still, we can still do it and, be accurate while doing so. But at the moment, you can't just hold a one-sided bias, right? Because we could see price go up, then drop, or just drop into this fair value gap below this low, and then we can rally afterwards, right? So we are within a range, that's within a bigger range. We have this liquidity void right here, right? Which we could retrade to if price dips into this fair value gap, right? So currently, that's what makes the most sense to me, right? We have this gap right here, and then we could see price fall below the equilibrium of this range, then retrace back up into this liquidity void. Look at GBP USD. So currently, we have sequential SMT, right, between the first quarter of this year and the last quarter of the previous year, right? So this is the high of Q4 of the previous year, right? And this is the high of the current quarter that we're within. So this right here is sequential SMT, right? If you look at the dollar index, the dollar index did not take out this low, whereas we had the pound taking out this high. So that's SMT in itself. Before we could, consider anything, we need to be mindful that we need to see accumulation, right? Daily accumulation, right? And then a sequential SMT forming on a lower time frame cycle. Right? Remember, we don't just go in due to the fact that we see sequential SMT, because there's a sequence that price follows. Right? This right here, the opening price of this candle, which is the opening price of this year, is a revolving true open. Why? Because it's between this high and this high, which is sequential SMT. Right? So right now, I would probably be looking for price to either take this high or leave it, right? While causing sequential SMT and, return into this liquidity void right here. And if, price negates that and we don't see sequential SMT here, then this high will be of, our interest. But I don't think that we'll get to that high right now. At least not before we trade into this range. We also have liquidity below these lows right here. Right, so I'm not being two-sided, right? I think this is sequential SMT, but we know that this is sequential SMT, but we just need to see confirmation on the lower time frame cycles. Now, we'll take a deeper look into the price action of the dollar index, the euro, and the pound. Right? So currently, there is not, anything to do right now. Right? I would like to see price either run below this low, while maybe trading to this level. Could happen either Tuesday or Thursday. Right? We have a lot of volatility that will be entering the marketplace, right? Down here, this was the low of the previous yearly quarter, right? So this was Q4 last year, and this was the low, right? We haven't even traded close to this before, this year. So during the starting of this year, we expected price to rally higher from here, right? And we expected it to actually rally to these levels. You guys can remember. And we expected price to return to the range as it is doing now. I think there's buy-side liquidity here. There is buy-side liquidity here. And we have buy-side liquidity here as well. Below these relatively equal lows, and within this fair value gap, right, we have liquidity that, could be activated if we have sequential SMT within this area. Same thing goes for the euro. Right, if price trades above this high, I would expect some, measure of retracement. Considering that, there is sequential SMT. So, I would like to see the price action of tomorrow be lackluster, right? Or even if it, expands, it stops before going for these levels, right? That's what I would like to see. We have sell-side liquidity below this swing low and below this swing low. We're not close to the previous quarter of the last year's high, whereas we have blasted through that exact high within the pound, right? For the pound, right, again, we need to wait for, lower time frame sequential SMT for this to be of any use to us. We have fair value gap here, and we have sequential SMT here. So we could see price, wake up and fall within this gap this week. I wouldn't be comfortable buying above, a previous quarter's high, right? Worse, it's the, yearly cycle. And, we have sequential SMT so far. So we need to see consolidation, right? For this to have any use to us, right? Just as how here we had consolidation, here we had consolidation, right? But just one candle, doesn't give us enough information to use. Now on the lower time frame, you guys can see a bit clearer, right? So this is the monthly cycle that we're looking at currently, which is comprised of 4 weeks, of course, as you guys know. When we're looking at the monthly cycle, we always, use the 4-hour chart because that's where we'll get the best insight from. We have liquidity below this low, right? This is the dollar. And we have liquidity above this high in the euro, and we have liquidity above this high again, the pound. So if we have, manipulation and price tags one of these highs and, leave one of them untagged, or tags one of these highs, form, say, a swing high, and then have SMT after that, then we could expect a reversal this week. This is the low of the previous week. All right, be mindful of that. This is the high of the previous week, and this is the high of the previous week. Right, which means that we could anticipate, SMT, sequential SMT, right, during this week, due to the fact that this is the low of Q1 and this is the low of Q2 could form here. We have buy side liquidity here. Here we have a balance right here. We have a pool of liquidity here as well. Right? We could even see price sweep this high, then fall, then continue high. We have liquidity below this low, and below this low, and a lot below this low as well. Right? So if you look at the the monthly time frame and you're just using PD rays, you would get a different bias basically. But due to the fact that we're using time and we're waiting for certain signatures to form, which is sequential SMT, hidden sequential SMT, and so on, we have a better outlook at price action. Now, we're going to look at my favorite thing, index futures. So currently, we have sequential SMT at these highs, right? So we had the opening of this price, the high of the week, the previous week, opening above the previous high of the quarter, which followed the previous week, right? Also, as you guys can see, I highlighted this high, which was formed above this high with, a red line, and here as well, right? Usually, right, whenever you're trading during a quarter which follows something that, forms like this, whereas even though, right, this would be what the regular person would be looking at for, SMT, we're going to use this one. And due to the fact that this swing high formed above this one, right, this would propel price lower, if you understand. And then right here, you can see that this candle, right, didn't trade into this gap, whereas this candle traded into this gap. Once price breaks below this, right, well, once price closes below this, we see it as a change in the state of delivery of price, right? And this would actually, be a real market structure shift. This high right here is the same high as this one, right? It formed at the same time. But this one was below these highs here, right? Can you see that? So this is above this. This is below this, right? In these cases, you usually have reversals, which is why we had reversals here. Due to the fact that we had sequential SMT above these highs, and we have a lower time frames ranges high below this higher time frame range high, right? So we had price sweep above here, right? This was already above this high, and this is what actually caused price to fall lower, because there are no higher time frame PD rays here for price to react from. You understand? And if you don't understand, you'll understand in due time. So we can expect price to, gravitate lower at the moment, right? So we can expect the Nasdaq at least to gravitate below this low, maybe this low, right? Which would be the previous week's low, right? The previous week's high was taken already, and there was sequential SMT, which formed during that. So we now look for these lows, right? Right, this is like where we're introducing the magneto effect, which I posted about yesterday, right? A current cycle's sequential SMT will cancel the previous one, and then the previous one will be usually attacked as liquidity. So it would like create a magnet effect for price, which is some things that we see happen a lot, right? So looking at price right now, you can see this was the high of the cycle before the last cycles, right? So we had price trade above, failed to break above this high, whereas in the Nasdaq it traded and broken above this high. S&P 500 broke above this high, but this failed to do so, right? This is weaker than these at the moment, right? At the moment, within the current cycle that we're looking at. So we can actually see price, gravitate below these lows, right? And what would, give us what I would say, give us the signal to exit a trade, right? If we find a setup here, which aligns with, this bias of taking out these lows. If there is sequential SMT, right? If there is sequential SMT, then that's when we exit. That's when you exit trades. You get in at sequential SMT, you get out at sequential SMT. Because remember, that's when price reverses. Okay? So we'll be watching these very closely this week. And last week we had beautiful price action, right? We expected price to fall. We got that. It was insane. Then we expected sequential S&P to form. We got this. Then we expected price to rally. Then we got sequential S&P here again. Then it rallied above these highs. And then Friday did what it's supposed to do, right? Return back into the range. Now we have the daily time frame. Right, you can see that we have SMT here, at these highs. Right here, not just any SMT, sequential SMT. Right, so these lows and these lows and these lows, are the next strong liquidity. That's what I see at the moment. And this goes, good with what we said that we expect, to happen with the dollar, right? Because if the dollar drops and rallies, that should send the index futures, to take those lows, right? And if the euro, rallies and forms sequential SMT, then that would be indicative of lower prices. So I hope that you guys, you found that, insightful. We will be, of course, going over the price action as it unfolds this week. Right, anytime there is sequential SMT, you will be, as usual, notified about that. So that is something that you'll always see, right? Me telling you when there is sequential SMT. And whenever there is sequential SMT, what do we expect? Reversals. You expect reversals. That's the main mechanism behind reversals. Right? Look at these highs we had price fall. There was no levels there. No higher time frame PDRAs. Right? It's just due to the fact that there's SMT. But not just any SMT, right? Sequential SMT. So at the moment we had SMT here, right? Remember, here, look at these lows and these highs, right? This SMT formed after this one, which would trigger the magneto effect, right? And we'll go over these things, right, as we go along. So I want to show you guys again, right? Right here. When we had SMT, right? We expected higher prices. But this candle broke this high, right? Returned back to the range. And then expanded higher. This candle did not break this high, right? So this is, something that you will learn, right? How to decipher fake sequential SMT, fake SMT, as we go along. You guys can see that we're really overbought, right? In regards to the S&P 500, even, Bitcoin and the forex market, not the US dollar. The euro and the pound. Yeah, that's it. So I hope that you guys, took something from that. Really hope that you did. And, mark up your charts. This week should be a good week for us. And not everyone has the insight that we have. Manage your risk. And I'll speak to you guys sometime during this week, probably before Wednesday. So I'll record. Well, this video is recorded. I'll just upload this video. I'll try to upload it to WAP and see what happens. Then I'll notify you guys about that.